This conference will now be recorded.
Turn up my volume. Okay. Hey, good morning. It is Wednesday, January 11th, 2023. Already starting well into the new year, and things are starting to really. I'm starting to see some changes in the market. I'm hearing from a number of our brokers that said, kind of out of the blue, they're starting to have buyers coming back, which is really encouraging. But this morning, we're going to talk a lot about what's been happening with the market, both nationally and locally. And so let's get started right away by sharing the screen. Okay, and we'll start with our slideshow from beginning. So what we want to talk about a little bit is how the current change in supply and demand works in favor of the educated agent. There's a lot of things happening right now. People are scared. People are saying things are overpriced as far as real estate. They see high inflation. And people are also thinking that things are going to crash. And so why shouldn't we wait to buy until later, or wait to list? Or there's a lot of things that are kind of pulling, and the news media, they like to sensationalize so many things. So recognize that people who have education behind them, people who really understand what's going on in the market, will have a leg up over those who don't. So when people are asking you, tell us about the market, what's really happening, to be able to really relay what's happening and to explain it well will give us a lot of help in coming across with a credible response, and come across as someone who really knows what they're doing, and someone out there would like to work with. So let's talk a little bit about that. Supply and demand. So let's talk first about mortgage rates. What's going on with mortgage rates? People are looking at this, and what is happening? So we've talked about this last year. We're going to talk about it again. How the 30-year fixed rate doubled last year. First time ever in the history of the United States that the 30-year fixed rate doubled. So if you look at where it was in January of last year, it's 3.22%, finished the end of December at 6.42%. That is a doubling of our interest rates, which obviously, when things started really going up like that, put a big change in the buying power of our home buyers. Made a big change there. So as we talked about before also, how last year, for 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury. And if you look at the 10-year Treasury yield, which is the blue line here, you can see what it did since 1972. And the 30-year fixed mortgage rate, following pretty much the same graph, the same chart, the same everything. And the average spread between the 10-year Treasury yield and the 30-year fixed mortgage rate has been about 1.7 basis points. 1.7 basis points. And that's been the norm for 50 years. So if you take a look at it in a different chart, the 10-year Treasury yield averaged over the last 20 years about 3.49%, with an average mortgage rate over the last 20 years up until 2021 of 5.28%, which gave us a spread of 1.79 basis points difference between the two. So that's been the norm for 20 years. Today, however, with a mortgage rate of just under 6.5%, with a 10-year Treasury yield at 3.69%, just 0.2 higher than it was over the last 20 years before. But the spread is 2.79%, a big difference. And so if we follow the norm, our interest rate should be around 5.5. But we're not following the norm right now. And why? If we had the normal spread, it would be 5.5%. And why are we not following that? It's because people panicked. There's a lot of panic, and that goes a lot into what people are offering. It also goes into what lenders are doing. They are building into their loans the idea that people will be refinancing when interest rates drop. So there's things like that. There's also a big change as far as what's going on when things hit the fan, like last summer, in the middle of the summer. People got really nervous with interest rates that shot up like that. We had inflation there, interest rates high prices still. So it really kind of put the brakes on real estate, and people got nervous. And so again, if you look at the 50-year average, and this is actually what is happened with our interest rates, the spread right there. So if you look at it again, 50-year average right here, this is the spread between the Treasury bond and also the interest rates. You follow it up, what happened from January to about mid-August, and then all of a sudden it shot up. But what's happening now? Interest rates, the spread is coming down. The spread is coming down because the panic that people were experiencing and nervous about, because when things change abruptly, people get frightened. It's changing now, so we're not having that panic, and as a result, we're starting to see buyers coming back into the market. There's still a 1% difference over what's been the average over 50 years, but we'll see if that downward trend continues on and we get back to a more reasonable interest rate. Now, the experts, they're all over the board on that. So the difference here is, going forward, are we going to be a confident agent who really understands what's happening? Or are we going to be confused and just don't get it? We need to be able to explain this to our clients. So if you look at Lawrence Young, the chief economist with the National Association of Realtors, he says the upcoming months should see a return of buyers, as mortgage rates appear to have already peaked and have been coming down since mid-November. There's going to be glitches up and down a little bit, but the anticipation is that shoot up that we've had has leveled out, and the panic is starting to subside. People are getting more comfortable with where things are right now. So if you look at the former Assistant Secretary of Housing, David Stevens, he says, be advised, this may be the one and only window for the next few years to get into a buyer's market. Now, we haven't had a buyer's market since the housing crash, since we were coming out of the housing crash. And remember, as the Federal Reserve data shows, home prices only go up and always recover from recessions, no matter how mild or severe. Long-term homers should view this market right now as a unique buying opportunity. It is a buying opportunity. We need to let our buyers understand that interest rates seem to have leveled off, and the sellers who are out there, a lot of them have incentives to be offering things to buyers in order to get their homes moved. So let's talk a little bit about home prices. Again, this is national right now. So here's what the experts are saying about home price forecasts for 2023. Basically, they're all over the board. No one knows. We're looking at Realtor.com, the home price expectation survey, which is a series of economists who specialize in housing, NAR. They're all on the plus that prices are going to go up. And then you look at Freddie Mac, the Mortgage Bankers Association, Fannie Mae, and Zelman, and they're all down. So we're basically looking, if you take an average of all of them, we're basically level for 2023. If prices level out, that's interesting. That would be giving stability for people feeling that it's a good time maybe to be purchasing, and so it's time to get into the market. So you look at this, again, these are the experts. These are the people who follow the trends and really know it, and no one has consistency. In fact, if you even look at the experts who work at the stock market, they're all over the board too. No one knows. I mean, it's so confusing. The trends, where can we go? Can we go up? Can we go down? No one has a crystal ball, but the trends are really hard to forecast right now. So let's look again, really what has happened for home price appreciation pre and post pandemic. And so if you look at the 2.5 years before the pandemic, the pandemic hit March of 2020, home prices went up about 12%, and that's normal. That's following normal trends, 3 to 4% per year. That's a normal rate of increase. When the pandemic hit, however, home prices across the country went up 38%. And I did data here for Bend. And when I looked at Bend's single-family homes for on less than an acre, between March of 2020 and March of 2022, home prices went up 67%. So, you know, this is the average across the country, but every market has its own data, its own statistics to look at. And as we all know, people who were working in real estate during those couple of years, things were pretty crazy, pretty much through the roof, multiple offers, all that sort of stuff, driving home prices up. Again, a 67% increase in 2 years is a non-sustainable price increase. So that's basically what happened pre and post pandemic. So when you look at that, you would think that 38% across the country would mean people are now starting to moderate their prices and bringing their prices down. In actuality, if you look at last year, the number of homes, the percentage of homes which have been having their prices reduced year over year, and this is from Realtor.com, in November last year is just a little bit over 1%. So we're not seeing a massive movement of home prices. People are not necessarily reducing the prices across the board, across the country. There's still something called inventory, and we still have little inventory for the demand. So have home values hit the bottom? Have the change in home values hit the bottom? Now, we're looking at here some big, some people who really do track the stuff, Black Knight, CoreLogic, Case-Shiller, and this is last year. And they're showing how home prices really made an adjustment in July and August. Things were going up for first part of the year, as we all know. And then in July and August, things started changing. This is the last, October was the last month that we really have data for yet. They haven't yet produced the November and December figures. But you're seeing that things started to really level off November and December. So we don't know for sure, but this is significant that that was a time where we started seeing home value changing. So the big issue here is we hear headlines across the board about housing is in a meltdown and how things are out of whack and are we looking for another bubble bursting and all that sort of stuff about foreclosures. But the thing is, we as the real estate experts have to have the head knowledge and the expertise to be able to control the narrative that's coming out there. When people ask us, we need to say, no, this is nothing like the housing meltdown that we had in 2008. It's a totally different type of correction to our market. As we said, the 67% for Bend single-family homes between March of 2020 and March of 2022 was non-sustainable. Having a correction, having it level off, and we'll go into the actual figures on that in just a little bit, but it's interesting to show that we are not having prices go down. We are not. They are leveling off. And something else to be able to share with people when they talk about this, recognize that over 11,000 houses sell every day across the country. And when people say, well, gosh, is anything happening? Yes, things are happening in our market. It's different. But things are still happening. We had over 11,000 houses sell every day across the country. And that means 8 houses sell every minute. So when you're talking to somebody and someone's talking about the market crashing, you can say, well, in the minute I just talked to you, we had 8 houses sell across the country. That does not mean that the market's crashing. It means things are still happening. It's just at a different rate than it was before. Housing is still happening across the country, and we need to be able to let people know it's still a great time to buy. And according to the former secretary, as I said there, he says this may be the best time ever for buyers to be maybe entering a buyer's market. So something to think about, and I've talked with a number of you about this, is alternative means of financing. And I know that lenders are coming out with a lot of great opportunities for people. A lot of lenders are really pushing some new financing programs. We're talking about adjustable rate mortgages, ARMs. Those were such a bad name that people gave them during the housing crash. But recognizing that ARMs have been readjusted, they are now a great viable source for people to be able to get into a home. Buying down the rate, 2-1 buy downs. Those are things that people are looking at, 3-2-1 buy downs. And if you don't know what those are all about, your lender should be able to give you some good guidance on it. And we're talking about maybe bringing in a lender to talk about that within our brokerage for CE credit too. So this is something to recognize. Alternative means of financing could be the difference between your buyer qualifying for a mortgage and not. The buy down the rate, it's like a 2-1 buy down, is basically that there's a set interest rate that for the first year of the mortgage, the seller gives a concession to pay the difference between a certain rate and the rate that the buyer is actually paying that year. So it's a buy down that the seller is financing in order for the buyer to qualify. And then the next year, the rate goes up to the long-term rate for the buyer. So it gives them an extra year to get their house in order and be able to continue on with a higher mortgage rate. So these are some options for people. So recognize again that the risk of ARMs were substantially mitigated by the regulatory reforms put in place after the 2008 bust. Today's ARMs are not the risky products of 2008 or even the pre-bubble version. ARMs are no longer something to fear. In fact, they could help borrowers save money and reduce barriers to home ownership. So something to think about. Work with your favorite lender. Find out some lending programs that could be the difference for your buyers. And again, temporary rate buy downs are a hot trend for mortgages as borrowers face higher costs of home loans. Some buyers are exploring alternatives to traditional mortgages in a period of rising interest rates that is expected to continue into 2023. Buy downs are a less costly alternative to traditional fixed rate mortgages. I'm seeing some lenders in our market who have affiliations with certain some builders who have affiliations with certain lenders offering certain buy downs if you use their affiliate lender. So there are options for our clients. In fact, I think it was in December, maybe the end of November, we had a buyer who got into contract with a builder using their lender. They got a great interest rate. They got so many concessions connected with the purchase of their home, appliance package, basically everything they asked for except blinds. And it was a great deal for our buyers. We have sellers, in this case builders, who are willing to negotiate, which is something that's really nice because we've had over the last couple of years before this time, builders basically say, take it or leave it, this is what it is. So it's nice to be able to have some negotiation power with your buyers when you're working with a builder and other sellers as well. Any questions on any of the stuff I've been going through? I'm going through it fairly quick, so I'm hoping everyone's picking up on it. Okay, let's move forward to the next one. So what is the biggest opportunity right now? There's a number of them, and but one of the biggest is something to recognize. And that is tied into the fact that the number one date of the year that listings expire is December 31st. That's the number one date of the year. And you have that opportunity to approach those sellers whose listings have expired and have the discussion with them. Why didn't your home sell? And talk with them about their price, talk with them about their marketing, talk with them about what you can do different than the agent they had before them in order to get the home priced to sell and to market it to sell. So that is something that you have as an opportunity. It's easy to look it up in MLS. What listings expired at the end of the year? And to door knock, I don't recommend that if you're female, unless you kind of know the area or have some support with you. Just don't want anyone to get into trouble by doing something like that. But writing letters, trying to communicate with these people directly and try to schedule a time to meet with them. Anyway, but something also to consider is we have listings that haven't sold. So the active listings in the past 2 years, from 2021, we're getting close to almost a doubling of active listings. We don't have new listings hitting the books, but we do have active listings that have been sitting there. Days on market are longer. Properties are there unsold. So for sellers who do need to sell, there is often a motivation for them to start looking at offers. If you have a buyer for whom that property may work, don't feel afraid of going in there and talking to the listing agent and say, you know, my buyer is interested, but they don't want to overpay for the property and want to see if they could start negotiations at this price, or see if that would be too insulting to the seller that they would say absolutely no. And I suspect that for a lot of sellers and their listing agent would say, just bring me an offer so we can start the negotiation. Also something to consider, listings are going up, excuse me, homes on the market are going up, but pending sales are going down. So this is the last 12 months year over year. Sales, things that are in pending contract, have been going down. This is through November. And I'm pretty confident that December, that figure is down as well. So pending listings are going down. Homes on market, the active home listings are up. New listings are going down, however. So this is kind of what we're looking at. Pending listings, that's down. Things are not moving the way they did before. So something to think about when you are working with your clients and in a market like what we are working in. You think of a racetrack, and when someone who's working a racetrack, a race car driver, they make their moves on the turn. The straightaways, everyone just kind of moves as fast as they can. But the best racers will slow down before going into the turn and then make their moves, make their adjustments, and usually be able to pass people in the turn and then come out to the straightaway, push it forward to the next turn when they make their next move. For real estate agents, we make our move in the turn. When the market starts shifting, that's when the agents who are going to have success and continue on in this business learn to make the adjustments they need to make. So I remember when the housing crisis first hit, and first time I heard of the word short sale, I said, what in the world is a short sale? I contacted First American Title and I said, I'm hearing the word short sale. Can you give us a class on what a short sale is? And they put a class together and they came out and they gave us a talk about short sales. And we had a bunch of agents, if you remember, people who've been in the market, who said, I will never work short sales. I don't like them. I don't want to deal with them. I think they're just too much work. Well, those agents didn't recognize that that move into the turn of a short sale, if they kept on going straight, they would have crashed into the wall. It's the agents who recognized the market had changed. We needed to learn how to embrace short sales. We needed to learn how to embrace foreclosures and learn how to represent buyers with REO properties, get educated on what an REO property was, and to be able to maneuver through the turn and come out the other end and accelerate through the next straightaway. So again, the thought here is, as you as an agent are working into a transitional market, to be able to maneuver through the turn, get your act together. There's opportunities that always happen. For instance, we are now starting to see notices of default come again. So people who are interested in looking into working into people who are suffering through notices of default. It's not necessarily mean short sales, but it may mean that someone may run the risk of foreclosure unless they can get their home sold right now. Also, all these expireds. What about all these properties that expired without selling? Are these people just taking their homes off the market long term, or are they at a point where they're willing to talk with another agent about, let's find out why your home didn't sell? Was it priced according to the market last June, or is priced as the market changed into November? So having that discussion, there's always opportunities that come out of a change in the market. So let's look at what we can do, what you can do as an agent to maneuver through the turn and come out across at the end in a better position to have success in 2023. So with that in mind, I wanted to go on to the next thing, which is our local market. So let's talk about what happened to us in December of 2022. So as we all know, this was a very different sort of December compared with 2021. 2021 was a continuation of what we had during the COVID pandemic, where things were selling super fast. We had our normal slowdown that we normally do in the holidays, but it still was a very strong December, one of the strongest, if not the strongest Decembers we've ever had since we opened our doors. For us, 2022 was definitely different. We had much fewer new listings. We were down 58% in our listings. Our pending contracts, we only had 16 versus 26, down 38% in pending contracts. Our closed, however, we were down 30%. We had 21 closings in 2022 versus 30 in 2021. But our year-to-date figures are very interesting. We had about 100 fewer closings in 2022 than we did in 2021, but our volume is still really high, or I think we're down maybe 12-13% compared to about, I guess this is about 20% in the actual numbers of closed transactions. So that's interesting. But when you look at what we did versus everything else, versus the whole market, I always like to look at this market summary. This is for Bend Residential in December of 2022. This is right from MLS, and you can look at these figures yourself, these charts. But the Bend figure here includes Sun River. So I think it always skews the market a little bit, but it includes zip codes 01, 02, 03, and 07. You can see the number of listings, new listings dropped is kind of normal, but we also can see that the solds dropped quite a bit, as did the new listings. The new listings were down significantly over the year before. Listing prices, new median list price up, surprisingly, but solds are down. And active median list price is pretty level. Absorption rate, now this is a normal slowdown in December, roughly a little under 2 months of supply. Sold to list ratio, we're no longer having multiple offers. Things are selling around 93% of list price. Days in market gone up tremendously. Cumulative days in market at 50. Remember, we were dealing with a couple of months, a couple of weeks for a period of time there during the boom here. Price volume, active list volume going down. So here is, again, what I always look at, December 2022 versus December of 2021, looking at apples to apples for Bend single family residential. This is what we're looking at for all of our MLS here. So you can see our active listings have gone up about 57%. That's a lot more inventory out there for people to look at, a lot more buying opportunities for buyers. New listings dropped off tremendously, though, almost 65%. We're down to 46 new listings in December versus 2021 of 130. People are not putting their homes on the market. Sellers are holding back. Remember that panic feeling, the feeling of, I don't know what to do. I'm just not going to list. I don't feel good about listing. I don't know where I'm going to go. I'm nervous. I still have a house, and my house has a good interest rate, or I own it free and clear, and I just don't feel comfortable about listing it. So people were not listing compared with 2021. New pendings down almost 57% from 2021. So people, again, are not entering into contract. People did not sell a lot in 2020, in December last year. Solds are down 45%. Sold volume down 42%. The average sales price, however, now this is the thing that's always significant when people say, well, when are prices going to crash? And just like when we're looking at the national experts, people who really know and follow these trends, they're all over the board. Some say prices are going to go up this year, some say they're going to go down, but only around 5%. For us, our prices are still up over what they were a year ago. So our prices are up 5.3% over December. Median price 0.4%, so almost level, but still a slight uptick. So it's still there. Prices are up a little bit. Percentage of list price, homes are selling for less than asking price, meaning people are negotiating. And months of supply, we've doubled our months of supply compared with a year ago. There's changes happening in this market. Just so you have a little more head knowledge, let me go here to this figure. And I'm going to show you where I get this data. This is from InfoSparks. And if you've never used InfoSparks, please see me. I'd be happy to show you how to use it. When I put Bend together, I drew a map outlining 97701, 02, and 03. So I'm not including Sun River in my data here. So I'm just pulling a Bend, single family, less than an acre. And I'm looking here over the last 2 years of trends. And each dot here is looking at that month in its entirety. If you pull this data down here and you look at rolling 12 months, that's going to give you a smooth line. It shows what happened over the last 12 months combined. I like looking at the data each month. And so this goes back here 2 years. So you can see, again, the median sales price of Bend was $675. But if you go back to last December, $675, and the difference was like a $500 or something like that, $675, well, pretty much the same. But you can see what happened here. Our home prices went up in March. They dropped a little bit, went back up in July, and then we've been on a downward tick. That's the median home price. Now, will this continue on into January? Again, January of last year, this might be the first year that we start seeing things cross. So January of 2022, home prices were $683. I don't know if we're going to see an uptick or we're going to actually see a decrease. We may see a decrease year over year this coming January. We'll see. I don't know. But the same chart we were talking before, new listings. Again, new listings are down significantly. Homes for sale. This is the seasonal down, but compared with December of last year, they're up. Pending sales. This is the big one here. We are really down on pending sales. People, but if, as I said, the panic mode seems to be getting a little bit under control, especially as lenders bring out new lending options and things. People's fear. Talking with a number of you, people are saying, I've got buyers. I've got buyers. I just got to find the right property. Talking with quite a few brokers recently, and they're all saying, yeah, I've got buyers coming in, or people ready to move. So that is very, very encouraging. Sold volumes are down significantly. Months of supply compared to a year ago, big difference. So letting your people know there's more options for you. There's more things to choose from. And with these new lending programs, or if you have cash, my goodness, you have opportunities. Also, the fact is, there are sellers out there, especially those who've been sitting on the market for a while, who are willing to entertain offers. During the COVID pandemic, remember the asking price was the bottom figure? Homes were all selling over asking price. Right now, asking price is typically the top figure now. So come in under asking and negotiate. Be willing to ask for repairs. Be willing to ask for buy downs. Ask for seller concessions. Most sellers are willing to do that. And interestingly enough, we are still seeing multiple offers. We got one of our listings in contract this last week. It had been sitting for a little bit of time, but this week, here we are in January of 2023, 2 offers on it. And they played against each other, and it ended up being a great deal for our seller. So there are still people at a certain price point, if you get it to price according to market, who are willing to buy. The price per square foot is coming down. And again, the sales price, we'll see what's going to happen with that. And I, at this point, would like to open up to people to please let me know what it is that you are seeing, because I need to find out if what the brokers I've been talking with is happening to all of you. Are you seeing buyers out there who are coming back to the market? Are you seeing any of that?
Excuse me, I'm not per se. I think they're still waiting. I've been told, oh, we're going to wait until spring, to see what the market does. And I agree with you. All of the real estate emails I receive, if they're not from NAR or CORE, they're all saying, oh, it's, the house prices are dropping. And I know that they may be focusing on different areas of the country, but I'm not necessarily seeing it here. I did see, though, it might be a useful tool for first-time buyers, is the Federal Housing Finance Agency launched the first-time home buyer mortgage rate discount program last year. And that's, qualified buyers can eliminate, I think it's up to 1.75% in mortgage rate add-ons. And they have to obviously be low or moderate income. But that could be helpful for all those, first-time buyers that are renters, because our rent, I think, is going up 14%.
Yeah.
Which is quite significant. I'm quite sure landlords are going to take full advantage of it in most cases.
Yeah, and that's interesting. Jane, are you finding that the lenders all know about this this thing coming from the Fed?
I don't know. I don't know. I was going to, I just found out about this in the last couple of days. So I was actually going to reach out to my couple of lenders and see if they've heard of it and if they do have a program in place.
Yeah, because we need to be able to be educated in all the stuff to pass our clients off to lenders who will do a good job by them and give them the best opportunities there. So thanks for sharing that. Yeah. Anyone else have something?
Yeah, can I jump in?
Absolutely.
I always tell buyers that rent is the debt that never goes away. I was involved in a property management company pretty closely, and our vacancy rate is still close to zero, and prices are sky high. I really like, from what I've read, we're not going to see rates go down this year, but we could see 2 rate hikes. So I really use that to further the narrative with buyers who are kind of on the fence. And I know that lenders like Guild Mortgage are offering free, I think how to say this, free refinancing within 2 years if rates go down. So that's you tell someone that it's $8,000 to $10,000 to refi, and they can do that for free within 2 years. Get in while prices are lower, and then refi. You kind of perhaps get the best of both worlds.
That's great, Ryan. We've always said when people are renting, if they qualify to buy, you're paying someone else's mortgage. Why don't you pay your own and build your own equity? So let's find a home.
And I am seeing both like first-time home buyers and investment buyers. I'm working with quite a few buyers right now. People have the money. If they're not afraid of the market, they're out there doing things. That's been my experience.
Well, great. Thank you for that. Now, Scott, did you have something too?
No, I just popped on a little late here, so I don't know if that pinged you or something.
Oh, okay. No problem. No problem. Okay, does anyone else have something to say about what they're seeing in the market? Because I'm hearing from some of you that I was talking with a broker yesterday, and she said, just out of the blue, here it is 2023, she's all of a sudden got 4 buyers who contacted her, referrals and various other things, past clients who are back active looking in the market. So we're past the holidays. They're looking to see if there's some bargains here in January, looking to see if they can find properties that would work for them. So I'm hearing that from people. Anyone else with any comments about that? Okay, if not that, how about haves or wants? Anything new coming in on the market? Any new listings or buyer needs that we may have something that would work coming on board?
Yeah, can I pipe in again?
Yeah, absolutely, Ryan.
So I had a 576 square foot condo at Inn of the Seventh Mountain incoming soon. It went listed before, it went pending before it was even live. And the buyer, who was a real estate broker, backed out. I think they got cold feet. So I've got that back on the market. It's $349. It has been meticulously remodeled. Like, it's by far the nicest unit in that place at that size anyway. It's got a full fridge, which is odd for that place. Really, really nice finishes. And we've put it about 20,000 above what other units of that size are selling for. So I think we're in a real fair ballpark, but it's back on the market. Everyone's asking about it now again. So I just want people to know that's out there.
Great. Okay, so maybe for people, I know we're getting some calls, floor calls and even walk-ins here at the office for people who are looking for short-term rentals, and that's obviously a place that you can do short-term rentals. So an option. Great.
Yeah.
Thanks, Ryan. Any other haves or wants, people? Okay, anything else that anyone wants to talk about? Okay, if not, then that's it for today, and hope everyone has a great day. I will be here at the office, and if you have questions, feel free to reach out. Thanks so much.